welcome to another episode of Poor vs. Standard. Poor here. As always, we are not financial advisors, and this is not financial advice. It is for entertainment purposes only. So all opinions within this podcast, YouTube video, wherever you're finding us, is for entertainment purposes only. Don't sue us. Don't do it. You can always reach out to talk to us if you'd like. You can find us at poorvstandard@gmail.com. You can find us on Twitter at vs_poor. And you can always just, put a comment down in the comment section of the YouTube video and we'll try and respond to you. With that, let's get into it. What do you say? So this is going to be a little short this week because there was a bunch of earnings reports. The stock market kind of was almost flat on the week. Like we went up, we went down, but basically all the indices were almost flat. The Russell was kind of like shit, but everything else almost the exact same where we started the week and where we ended the week. There are some things that are moving. There are some things that moved in a way that you wouldn't expect. And earnings on some things like Shift Technologies and PubM. They didn't go the way we thought they would. The earnings were fantastic, but the stock shot down. So that was interesting. And there are outside catalysts in the market now that may affect the market overall. We are recording after 8 o'clock on a Sunday. And the indexes, the future indices are actually down about a quarter of a point or so, depending. And I have a feeling that Monday is going to be a little rocky because of the political situations that are going on, where you have a very unsettling issue happening in Afghanistan right now with the U.S. pullout and what's happening there. A lot of attention is going to be focused there, and a lot of businesses may see that instability that is happening in Afghanistan as a sign of future things to come in the region. So if they have any products in that region that they want to move around or whatnot, or go through different ports and things like that, through like between India and the Middle East or somewhere in there, the destabilization of that area starting there could affect other localities, and it could destabilize the entire region, which would cause a lot of issues for a lot of companies that use that area as a means of moving things around or production or anything like that. And that could have reverberative effects around the globe. Just because, you got a lot of oil production around there. You've got a lot of different companies that buy land in certain sectors over there to use as production facilities. So, you're a hop, skip, and jump away from India. You're a hop, skip away from like Egypt and the entire, Baltic Sea area, the entire Mediterranean area is real close there too. Turkey, Istanbul, all that crap is over there in that general vicinity, and there's a lot of business that does take place there despite what some people believe. So you may see a red market tomorrow, Monday, and you may see a bunch of people with uncertainty in one area. You may see certain sectors sell off tomorrow. Maybe not the entire market, but probably parts of it. You will see sell-offs. That would be my guess. I'm not entirely sure on that, but it would make sense to me. But then again, Shift Technologies and PubM, things that the Walrus Street was actually very, very keen on. They to the T. His due diligence was to the T, but the stock price still tanked, even though it shouldn't have. But what do you do? The market can remain irrational longer than you can remain solvent. So it is what it is. But just be careful tomorrow. You may see some things happen. you may see some instability, and when we see instability, I like to get in SPY, do some, call buy, put buy, strangle straddle sort of thing. Yeah, that's one of the bigger news stories at this moment in time. So I didn't really have a lot of, financial news to cover, but we are going to cover a little bit of AMC. You will see that there is a bunch, like if you can look at the level 2 data and you can look at some other fields, it appears that there's a lot of institutional orders currently buying AMC, which is a good thing. And it looks like it may be poised for another run. Now, I don't know how high that run will go or when it will happen, but in the next week or so, you may see a tick in AMC shoot up. That would be very interesting to me. I would like to see that. Institutional money is always welcome, and I think it's a very interesting time if institutions are going to start riding the back of AMC because they see something that a lot of us don't, because they have access to things that a lot of us don't. And it was many, many large orders of AMC shares. So either shorts covering positions or what, I don't know. I can't tell you because I don't have the means to know. But it's a very interesting development nonetheless. The portfolio was down probably about $1,000 or $2,000 over the course of the week. Some Amazon call debit spreads did not work out for me, so that was about $1,000 worth, so that makes sense. That's okay, we'll get there. So we'll just turn it around this week hopefully. And I did buy 100 shares of the Smile Direct Club like I told the patrons, and I did buy a couple week expiring calls when it went down to $5, and I sold them almost at the high. It was very impressive. I don't usually get it that close to the high. But Smile Direct, it was I think I sold it around when it was like $5.30 or something, and my calls, I bought 2 of them for 29 cents and I sold them for 60-ish cents. So that was a pretty decent double up. The swinging for the fences play last week, I feel good about that one because it was actually under $100 and it fit the criteria perfectly. But yeah, I'll be dicking around with some other maybe simple calls, not for a Smile Direct Club or for something else. But it is worthy of note that Jeremy of Financial Education, who has a very good track record of picking stocks that are undervalued, he did discuss Smile Direct Club shortly after we did, because we noticed it and noticed how beat down it was. And then sure enough, like that night after we mentioned it, Jeremy was on top of it. So that confirmation bias actually gives me a lot of confidence. And he also did note and mention about Tattooed Chef, TTCF, how it had sank, and then it sank even further. And Monday will be interesting because if the markets are down and Tattooed Chef goes down further, I will probably buy more. I like the stock. I like what it's doing. And their earnings report was not bad. They missed maybe by $4 million, something like that, roughly. For a company this size and for all the money they're spending, I don't see that as a problem. They're getting more and more spots in stores. They're getting more and more production facilities up, and they're getting, just bigger. So I don't see that as a problem. I think that's pretty much all on this front that I wanted to discuss. Then there was something else. Oh, right. Crypto. With the crypto market, it's about 50% up from last month, honestly, which is pretty impressive. Bitcoin currently trading just shy of 48K, so that's a new local high, I believe. We're pretty close to it. Ethereum around 3,300, and Cardano currently at $2.16, roughly. If you're watching the YouTube video, you can see these things. And then Dogecoin is at 34 cents, which is impressive on its own. But yeah, there's been, ever since the regulation of last week, people have started to flock to it because of the regulation, but it's not actually been put into law yet. And I don't know that it will. We'll see what happens. But it's very interesting that off the back of that, you have a pretty decent rise up spike in this. And it may just be that people tend to want, government control of things. I don't know. That would suck if they do, but it could just be that they know that these companies can move out of the U.S. so that they don't have to deal with these regulations too. But in any case, the fact that crypto's going up is a good thing. People want to see money flock in there, so it's a very good thing. And I think between this and shorts covering positions on cryptos, and if this breaks 50K, if Bitcoin breaks 50K, I think you're going to see a lot of FUD, and you're going to see a lot of people start buying at 50K, because people do love to buy on the way up. They really, really don't like buying on the way down, and it is honestly the exact opposite of what you're supposed to do. But it's funny because once things are running up, they run up even faster because of the fear and uncertainty and doubt and demand, the miss out opportunities, that kind of thing. When people feel like they're going to miss the boat, they jump in and they cause it to spike even harder, even faster. So just be prepared. You may see a sudden spike from 50K if we get there all the way up to like 60, or even a new high of like 75K. So just be on the lookout for that. And yeah, that's I see good things for crypto. And if it ever comes back down into the 30s, I'll be there with my buying shoes on. So definitely good week for crypto. I like it. And as I've told the patrons, I have continued to buy Cardano mostly, and a little bit of Ethereum, a little bit of Bitcoin here and there. But yeah, this is definitely the still early in the game kind of thing, because we're just barely tapping what can be done with these things. Smart contracts coming to Cardano, very exciting stuff. So we'll see what goes on. But yeah, I did have a question from a listener. They wanted to know, as far as options trading goes, if they wanted to mitigate their losses on a contract. They had bought a call contract, and it was out of the money at that point. And so it wasn't going to be executed, and they were losing money. So they asked if selling a contract below that price, because it was really out of the money at that point, would be worth it to them. And it really depends on the stock. That is a bearish position, because you've sold the high call, or you've bought the high call and you've sold the low call. So what happens is both of those are currently out of the money for them, and they wanted to know if it, what happens if it shoots up past both of those calls. And essentially what would happen is the call they sold, they would be required to sell 100 shares at that price. So let's say they sold a $10 call, the stock is currently $5, and they bought the $15 call. So let's say that for whatever reason that price shoots up from $5 all the way to $20. So they're both in the money now. So now they're obligated to sell 100 shares at $10. So that's $1,000. But they also have this $5 or $15 call where someone has to sell them 100 shares at $15. So they are going to be buying the $20 shares at $15 and then selling them to someone else for $10. So they're only down $500. Whereas if they just hold their call and that were to happen, they'd be up $500. But the odds of it shooting up 4x is very, very unlikely. But it's something similar to that. So that is not a call debit spread, but a call credit spread, where you get credit for selling the more expensive call because it's closer to zero. And that is a bearish position. And this is just a reminder of how that works, because we did cover those in the first episodes on the podcast, but I am working on getting a brand new, we're basically going to go over all of the options, plays, and things like that. But I'm going to do it for both the podcast and the YouTube, and they're going to be short little videos, and they're going to be like in a little sample thing, a little like 10-minute lessons and that kind of thing to try and help everyone understand better. But if you guys have any questions, comments, or concerns about anything options related, feel free to always ask. We're always happy to do that. And if you have any comments as to what you want to see in a future video or future podcast or anything you want covered, I'm happy to do that too. So feel free to reach out to us. We're always happy to help. But with that, play of the week will be on Twitter, so check us out there. The Swinging for the Fences play, and I'll let you know options I buy and sell over the week. And I've started to do almost daily at this point stock alerts for the patrons. So I will announce, what I've done, whether or not it's a buying, a selling, put, a call, that kind of thing, to the patrons in real time, as far as what I think should happen with the stocks on the stock alert. And that I'll mention what the name of the stock is, but I won't tell you what I've done to it or what I will be doing with it on Twitter, just so you get an idea of, okay, this is actually valuable. These are stocks that I like, that kind of thing. But I'll stop doing that on Twitter probably in the next week or so. This is just to get a feel for people who are actually following us, to see, if they would find value in the Patreon. But yeah, as always, thank you. Without you, we wouldn't be doing this, and we do this for you. So thank you. We appreciate you. This week, it looks like it's going to be a little bit of a bumpy ride. So trade well. Be safe. Good night.